This is, make no mistake, this is a positive agreement for not only the Saskatchewan agriculture industry, it's really positive for the Saskatchewan agriculture industry, as we produce about 55% of the canola production in this nation and a higher portion of the pulse crops in this nation. So it's very, very significant to our Saskatchewan farmers, to all of our exporters, to the processing industry here in the province. But it's also important to the Canadian agriculture industry, and I would say equally important to the Canadian economy. This is an industry, canola alone employs over 200,000 people across Canada, and is a $44 billion industry. This is a very, very significant decision that was made by the country of China. And I would just echo some of the comments earlier. Thanks, yes, to our federal ag minister, Heath MacDonald was there. Tim Hodgson was there, the energy and resource minister, and I'll get to that maybe just in my closing comments. Melanie Jolie was there, Anita Anand was there. As well as Cody Blois was there, who, as I said, has really been the continuity for these negotiations throughout. That's a significant delegation, and I had made on my notes that particular day in Beijing. That's a significant delegation, and that isn't lost on markets where we are selling our wares, so to speak, or where we are marketing our products. When you show your face in markets like that, they most certainly are going to take note of that. So that was a credit to the federal government, and you haven't heard me saying that a lot in the last decade, but I will say it here today. And a credit to Prime Minister Carney for engaging earnestly at all levels of the Chinese government. This essentially gets us back to, people will say, what does this mean to the Canada's trade relationship with China? From an agricultural perspective, this gets us back to where we were a year ago. No more, no less, really. We had slight tariffs on some of our ag products a year ago. We have slight tariffs on some of our ag products here today. What this is going to allow us to do is to get back to flowing our canola and pulse stocks to China, as well as many other countries around the world. Some folks will say from time to time that we are too dependent on whether it be the American market or the Chinese market when it comes to selling our agricultural goods. That may be true. However, they are the largest markets in the world, and in the case of China, it's a premium market. They pay more, and we worked hard to get into that market to diversify some of our agricultural products away from our areas, not just the United States of America, but from other areas in the world. And as everyone knows in this industry, and in particular if you attend classes in this building, you'll be fully aware that the production values in our farms has gone up significantly since I attended in this building 30 years ago. And so we have more to sell. And so certainly we are in the Chinese marketplace for a reason. It's one of the largest markets in the world, and they pay more. It's a premium market, and we're going to continue to make efforts to access that market. However, there are additional opportunities for us as we look ahead in the renewable and the biofuel space for canola specifically. So what this does is brings us back to the trade relationship that we had last year and have had for the last number of years in China. I'll also comment on the EVs because it'll come up in the questions, I'm sure, at the end. There's 49,000 EVs from China that will be made available in Canada at a 6.1% tariff rate, as opposed to the 100% tariff rate that was in place. That represents about 3% of the market share for EV cars in Canada, and certainly I think when you trade that off with a $44 billion canola industry, plus the pulse industry, plus the beef announcements that were made today, plus the opportunities that we have in energy trade into the future, as well as some wood MOU that was signed on forestry products as well. Most certainly this is a beneficial deal, and I would say a beneficial opportunity for Canada as we look to the future trade with a country like China. So I would say that this agreement with China is one of the strongest agreements that I have seen in my elected time. And I would say in the time that I have spent in China over the course of the last decade, that the tone of the conversation has certainly changed. It's certainly changed to not only return us to a place where we are able to access China, the largest market, and in many cases a premium market for our agricultural products, but also looking to expand some of that trade into some of the other products that we have available here as well.